Hello, my name's Todd Lees from Lotema Brokerage and welcome to our Australian cereals and pulses update. Well, we're now well into April, and in Australia that means we've either started planting or we're seriously considering commencing our planting operations. The critical factor determining this, of course, is soil moisture levels. Fortunately, our farmers in the cropping belt of Australia have received good rainfall over the past 3 months that has filled subsoil moisture levels. This map from our Bureau of Meteorology illustrates that quite well, showing rainfall received over the past 3 months. You can see that purple band there in the top end received nearly 1 metre of rain in the past 3 months, and some cyclonic activity that we had has certainly contributed very well to those subsoil moisture levels there on the east coast of Australia. What we're looking for now as well, though, is 10 to 20 millimetres of rain to fill in that gap, so replenish that topsoil moisture in Australia. And fortunately, over the last couple of days and even now as we speak, we're receiving rain in West Australia, South Australia and Victoria, which is actually replenishing that topsoil moisture. So it looks as though the crop is going to go into the ground under pretty good conditions, and we're probably going to need it because the Bureau of Meteorology is forecasting a drier than average next 3 months, over April, May, June. So again, it looks as if we're going to need that good subsoil moisture. Planting operations have commenced in West Australia and South Australia, where they're starting to plant canola and lentils, those being the first crops going into the ground. To the markets, fairly quiet trading activity over the past week, with few offers being presented, particularly for pulses. Schools of thought here are: one, farmers are concentrating on their requirements for their planting operations and quite happy to put any further marketing decisions on hold until they've completed their planting operation. Two, farmers are well cashed up, so therefore they would prefer to wait until the new financial year before they sell any of the remaining stocks that they may have on farm. That begins in July. Three is that any traders that are holding long positions, their views are bullish, and therefore they're quite happy to wait until their higher price targets are met before they present any offers to the market. Price indications are as follows. Australian wheat, APW is about $200 FOB on the east coast. ASW is at a $5 to $10 discount. Desi chickpeas were offered yesterday at $970 May, June, and around $800 for October, November. Lentils were offered or indicated around 645 ISC, but there was very little interest at this level. Faba beans are still in the doldrums with little demand, and they're indicated at around $310 Red Sea. I believe UK faba beans are also offered around this level, around $300 to $310 delivered Egypt. Kabulis and canola, a lot of buying interest, but they're a little bit like the proverbial hen's teeth. Offers are extremely difficult to find. So on that note, thank you for listening, and we look forward to catching up with you again next week. Bye for now.